Welcome, everybody. For me, thank you very much for attending this seminar that we're doing together with our colleagues at Capital Asset Management, that we very much appreciate their collaboration in this seminar, okay? So before starting the presentation, just telling you that that we are always trying to find out which are the best investment opportunities that can deliver a good performance in the future. And is in relation to this that we have built up this product. So we don't build up products, it's just the opposite. We find out good investment opportunities and then we try to build out the best product just to take profit of this investment opportunity, okay? So well, this is going to last approximately 1 hour and then you will have some Q&A. And please, take profit of the presence of our Capital Asset Management partners, colleagues, because they are the ones who have a full knowledge on the subject that we are talking today, okay? So we have more than that. I'm going to start my small presentation, okay? Okay, so here is the name of the fund, GVC Gaesco V.I.F. V.I.F means Vietnam, Indonesia, and Philippines. Philippines is not in the way of Philippines PH, but F, the Spanish way of the name, okay? So what's going about? Number one, here I want you to fully explain the rationale behind all this, Here I show you this graph. In this graph, you see two graphs inside. This orange one, this is the behavior of the MSCI Emerging Markets Index. And as you will see, this index is more or less at the same level it was 17 years before, So it's very clear that until today, the emerging markets have been lagging the rest of the global markets, okay? But now more than that, we think that it's time for these markets to start again going up. And now let's explain you why. Here I show you the second graph. In the second graph, this kind of blue or green color, okay? Here you can see the US dollar, okay? Here the graph is US dollar against euro, and you will see this graph. It's from 1986 until today, so about 30 years old graph. Now, what's been shown here is the PPP, the purchase parity, way of calculating the right valuation of each currency against each other. And it's a very simple valuation. It's just by comparison of the different inflation rates. Now, if you look at this, the fundamental right value according to PPP from US dollar to euro is this right, is the 0 one, okay? So when you see this graph below this line, it means that the US dollar is expensive. And when you see this graph in the upper side, it means that the US dollar is cheap. As you can see, this has a pendulum behavior, Here you see expensive US dollar, cheap US dollar, expensive US dollar, cheap US dollar, and now we are in the territory of expensive US dollar. Okay, now you can see as well that this pendulum has some kind of limits. When the US dollar was more expensive, it was about 30% expensive with this fair fundamental value according to PPP. And when it was cheap, it was around the 30% cheap level. Now, what's the situation today? Well, here you have the situation. We are in the last decade in a situation of expensive US dollar, okay? And if we compare all this area of all these almost 4 decades, you can see that US dollar has been in the expensive place 58% of the time, and in the cheap place 41% of the time. Now, what do we think today? We think that the US dollar can enter into, after all these years of expensive US dollar, we could enter again on all the territory of cheap US dollar, okay? The trigger of this could be simple. One of the triggers is that the drop in interest rates in the US, which has already started, could even intensify more in the future relating to the rest of the world. Now, let me see, and I put you these four situations. The relationship between US dollar, cheap or expensive, and emerging markets. If you see here, you know, when the US dollar was expensive and going into the cheap territory, not when it was already cheap, but on the way of being cheap, here you had a huge run on the emerging markets side, okay? Here you see as well a perfect correlation, but more than that, let me show you these two periods here. Here we went from expensive to cheap, and before reaching the cheap, you saw this run on the emerging markets index, you know? But then, of course, it went again to expensive, and then it pulled back. Here it happened the same, from expensive to cheap, and here you had this huge run again of the emerging markets, and then when the US dollar was expensive again, you had again the pullback. So what we think is that in this situation, in the coming months, it could happen this in the way of going here. The trigger should not happen when the US dollar is here or is here, but someplace when the US dollar is in this territory. So we are doing this quite in advance. I'm not now going to speak about the reasoning behind all this, just to know that, of course, for most of the emerging markets, a cheaper US dollar means a cheaper exports and a better competitive situation, apart from other aspects, okay? So this is the thing why we think that now it's time to build a position in emerging markets, okay, in these months. Now, of course, the people who know us from many times, we know that we have already a global emerging markets fund, okay, investing in all the areas in emerging markets, okay. The thing is that we already have this, but we have done an exercise of getting to know which are the emerging markets that can do best within the emerging markets space from the coming years, okay? And this is why we have created this fund, GVC Gaesco V.I.F, Vietnam, Indonesia, Philippines. Just a few words about this. Well, you know that there is the Asian zone. The Asian zone is comprising 10 countries. You can see here all this Asia. And we have delivered the conclusion that this area is going to be the most benefited from all this increase in emerging markets, okay? More than Eastern Europe, more than the rest of Asia, more than Latin America, and more, for instance, than Middle East, okay? So here we have a range of 10 countries to invest. Within these countries, we have been doing our own research of which can be the countries within this region that can benefit the more of this process. And our conclusion is that the 3 countries that can benefit the more are Vietnam, Indonesia, and Philippines. And this is why we have created this V.I.F fund, okay? Just for you to know that these V.I.F countries are accounting for 72% of the total population of this Asian zone. They comprise 57% of its territory, but only represent 47% of its GDP, okay? Now, we have a full explanation, but I am only going to the main points, okay? So I want you just to know why we think that the V.I.F region is the best one to be invested. Number one, if we compare the global emerging markets here with the V.I.F, you have that the GDP, the nominal GDP, is growing more than the rest of emerging markets. So number one, in these 3 countries, we have highest growth than the rest of emerging markets. Number two, we have the GDP per capita is almost half of the GDP per capita of the global emerging economies. It means, of course, that there is much more room to grow from these countries than for the rest of the emerging markets, okay? If we go to GDP per capita, the growth of GDP per capita, of course, is also higher than the rest of the emerging markets. And if we look at the investment, all of us know that these countries are receiving lots of investment, foreign investment. The total investment per GDP is much higher. It's almost 29% to 20% of the global emerging markets. In these 3 economies as well, we have lower inflation rates, You have the global inflation, you have the emerging Asia, and you have the inflation in these three countries. And if you look, for instance, at unemployment rate, we have half of the unemployment rate that it is present in the emerging markets. Okay, it's almost 5 compared to 10%. Much more savings in percentage of GDP, 29% against 24.6%, and much lower gross debt. So it's 41% according to 60%. We could be talking here about more things, because of course there are more things to be common. The fact that the people is very young in there, is younger than the rest, etc., etc. But I just want you to highlight the main things why we think that this will deliver more than the rest of the emerging markets. Now, if we look at the index evolution, it's very clear that if you look at the last, here you have Vietnam, Indonesia, Philippines, emerging markets, and global markets without emerging, okay? It's very clear that for the past years, 15 years, the best stock has been the global one. You know perfectly this, and I was mentioning that for the last 17 years, emerging markets have not performed at all very well at the equity market, okay? We need to go to longer term, because of course, I mean, the highest your growth is, the highest your performance in your equity market should be. So this is somehow an anomaly. We should expect emerging markets to deliver more than the rest of developed markets, you know? We need to go to 20 years just to show that Vietnam, Indonesia, and Philippines, this is the annualized total return, is higher than the emerging and also than the global markets. But we need to go to 24 years just to show that, of course, Vietnam, Indonesia, and Philippines keep being the most profitable markets, but 24 years to perform that emerging markets are doing best than the rest of global markets, which is an anomaly. Emerging markets should do better before that. We don't need to go for 24 years. Here you can see the performance. This is the MSCI, the green one, MSCI World. This is the emerging markets one. And here we have Philippines, and here we have Vietnam, and here you have Indonesia Stock Exchange, okay? Now, there is as well another qualitative issue. I know that this is qualitative, but you know that these qualitative things have, in the long run, always have importance. We have a real diversity of religions between these three countries, okay? So in Vietnam, most of the people, about 73%, is following the tradition, you know, roots. It's not a religion itself, but it's a tradition, a folk religion, okay? In Indonesia, 87% are Islam followers. And in Philippines, 79% are Catholic Christianity. These kind of things have not importance in the short term where we're talking about companies, but we know from many reasons that history is providing us that in the long term, this is always really important to have this kind of diversity, you know, involved. Now, until now, I'm explaining to you, I mean, why we have decided to launch Vietnam V.I.F fund, okay? But then, of course, we are very aware of the capabilities that we have. We have a lot of capabilities in our asset manager. One of them, as you know very well, is the global tourism, you know, and this is one of our strengths. But of course, if we want to take profit of this, we need to do some kind of partnership. We need the advice of an asset manager on the ground that they have been investing in this region for many, many years now, and with a huge expertise on this. So for us, it was not conceivable to try to do this by our own. So for us, we can do this if we have the advice of a really, I mean, expert in the region, okay? By expert in the region, you know that we are active managers, not passive managers. So we were looking for an active manager with a lot of expertise in the region, in a long-term expertise, visiting companies in the region, etc., the same thing that we do in the regions where we are. Now, for me, it's a pleasure to introduce Capital Asset Management. We have been collaborating with them for years now, and we know about their professionality and their way of doing things. And so for us, it was clear that creating this fund, we need the very experienced advisor of capital asset management. Of course, there is nobody better than asset management themselves to present their capabilities on the region. For me, it's a real pleasure to introduce Toshinobu Yamasaki-san, which is the representative director and the CEO of Capital Asset Management, which I get to know from many years now. I know his incredible team, what they are doing. And please, Yamasaki-san, it's up to you to explain what you're doing. Thank you very much for being here with us today. Thank you.
Thank you. Hello, everyone. My name is Yamazaki, Toshinobu Yamazaki. So it's a great pleasure to meet all of you today. So I'd also like to thank Mr. Jaume for GVC and all the people involved for inviting us, and all of you for being here. So let me begin by introducing my company. So Capital Asset Management is part of Capital Financial Group, which is a holding company. This holding company is a Japanese financial company. It's not affiliated with any of major Japanese financial institutions such as Nomura, Mitsubishi, or Mizuho. We are an independent financial institution. It's also not the largest capital group in the world, despite the similarity of its names. So under the holding company, they are mainly brokerage and management and a research firm based in Hanoi. So let me briefly introduce Capital Asset Management Company again. So Capital Asset Management acquired the management company established in 2004 and changed its name to the current name in 2010. We are a fund management company with more than 13 years of experience in managing funds, investing in emerging market equities. We manage the 10 public mutual funds in Japan, advise on Vietnamese equities, and manage pension funds. The public funds are following: Vietnam Fund, ASEAN Funds of Funds, Philippine Fund, Tourism Fund, and Global Biopharmaceutical Fund, and Alternative Fund, and so on. So we advise the foreign mutual fund managed by external manager on Vietnam equities. We also manage the pension fund for the large Japanese companies. The common theme or topics of this fund is growth. Our specialty is the management of ASEAN equities. In particular, we have a unique strength in equity, investing in ASEAN countries such as Vietnam, Philippines. In particular, we have a long track record of in-house management of Vietnamese equities, and we are proud to be the leading manager of Vietnamese equity in Japan. When investing in Vietnam, we work closely with a local research firm based in Hanoi, which was established in 2010. In August of 2010 and August 2014, so we launched 2 equity funds in Vietnam and earlier in Japan. Let me now share with you our investment management approach. From a global perspective, we seek to identify countries, region, asset, and theme that are in growth trend in order to achieve long-term asset growth and investment return opportunities. We do this by gathering information, conducting research, and using our unique insight to identify and invest in stocks. We also invest with a growth in my mind. We analyze the growth potential of each sector and company, whether emerging or developed, according to the growth stage of the country in which we invest. and select stock and sector allocation accordingly. In addition to market, credit, and liquidity risk, we believe that an accurate understanding of the political, economic, social, and other risks inherent in the countries in which we invest will lead to growth in asset under the management. We are mindful of this idea, even though we have a long way to go. We have built our fund with growth in my mind. Here are two examples. 5 years ago, by GVC, we were advised on a tourism fund that we are offering to Japanese investors. I'm sure you will all be very impressed if you go to Japan. There are 4 seasons: spring, summer, autumn, or winter, and you can feel the difference between them. We are in autumn now in Japan, so the leaves on the trees are turning red. We call this autumn leaves koyo. Hakone and Kyoto are very beautiful place. And in winter, snow begins to fall in the province. In Hokkaido, in the north, the wide plateau is covered with snow, and it is a beautiful sight. However, vacation in Japan were mainly day trip or short trip over a few days. Understanding your long vacation as tourism changed the way we thought about travel-related companies. It fit our investment idea of growth. Second, let me tell you a little bit about why we are interested in ASEAN. After 1945, Japan experienced a period of rapid economic growth in the 1970s. It was when people worked hard to increase their income, and per capita GDP exceeded $3,000. At the same time, consumption of television, refrigerator, and washing machine increased. In 1970, the average age of population was low at 31.5 years, and the population grew substantially until 2008. Today, as you know, Japan is a nation of elderly people. So Japan's population peaked at 128 million in 2008, and is currently 124 million. The average age is 49.5. In the past, there were many young people, and the population structure was a neatly shaped pyramid. But now it looks like different shape. Of course, I'm not saying that Japan is finished. So Japan faces the next stage of challenge. Its production efficiency, it will be important. The last thing I want to say is that I think that the idea of focusing on growth potential and investing for the long term is the right one. So of course, country with a young population is ASEAN. The ASEAN countries have learned a good thing from Japan in the past, and many may now be countries with more industrious citizens than Japanese. They may be in the proud of Japan's rapid economic growth in the 1970s. I'd like to share this point with you as an attraction of ASEAN. So let me introduce our team, CIO, Mr. Oka, sitting next to me. So he worked for Nomura Asset Management before, and he has 27 career in Asian equities. And Pham An, so he is a Vietnamese. Most of information released by Vietnamese company is in Vietnamese language. So Vietnamese people who understand Japanese is very important to us. So Tomokazu Kitamura, he works for Daiwa Securities and BNP Paribas before, and he has been an analyst for 70 years. So from now, so I will hand over to Oka, head of investment. So, and then we explain about ASEAN V.I.F countries. So, Mr. Oka, please.
Yeah. Thank you, Yamasaki-san. Yeah, I'm Oka, and just to introduce that I manage this insurance funds 27 years, and I stationed in Singapore and Mumbai in India 5 years, 3 years. And I quite enjoy to manage those Asian funds because those are really excited about this growth story in this region. So it's really enjoyable job for me. So let me start my presentation.
Yes. 共有だな。あそこ共有してる？
共有してます。Okay, so this page, if you look at the bottom left chart, this chart shows that the orange line shows the combined GDP of ASEAN 10 countries. As shown here, that has been growing quite steady and expected to grow over the next several years. And actually, next year, year 2025, this ASEAN combined GDP will exceed that of Japan. One key background of this ASEAN growth, I would say that integration. Each ASEAN country is small, but now ASEAN as a group has a population 670 million people. That is not really ignored. So they try to integrate the economy, and that kind of things attract the more foreign direct investment in this region. That is, I think, a key element for their growth success. And also among these ASEAN 10 countries, if you look at bottom right chart, we particularly are looking at these V.I.F countries. Now this the 3 countries is classified as middle income countries, and as Yamasaki-san explained, these per capita GDP of these 3 countries, 3,800 to 5,000 level. So that means that the consumption on those consumer durables like home appliances is increasing strongly, and if those per capita GDP exceed 5,000, then motorization may start. So consumption base may increase the faster compared to other ASEAN countries. This chart shows that IMF growth estimate over the next 6 years. Looking at the left side, V.I.F nations, Vietnam expected to grow 6.4, Indonesia 5.0, and the Philippines 6.3% is expected. If you look at the far right, Thailand actually decelerate to 2.9% next 6 years, and Malaysia 4.2%. Again, we'll see that deceleration. So among these ASEAN nations, so V.I.F countries will maintain quite high level of growth. Yes, and also the China growth decelerated quite rapidly, 3.8%. In terms of the, say, foreign direct investment, that is the one growth driver for this region. Actually, say, this China plus one sort of say environment could be a good tailwind for these ASEAN countries. We have seen in China the increases in wages and copy products and the forced technology transfer, so forth. And entering into the Xi Jinping regime, he has, say, say, increased his power and more, how can I say that, he is more like a stronger, say, country, not really that economic development. So that create a lot of, say, US-China trade issues and so forth. And bottom column shows that last year, China amended anti-espionage law. This is a sort of, say, major risks now for foreign companies. So that again may push for the companies to shift from China to ASEAN region in terms of the, say, manufacturing production base. So that is a tailwind for ASEAN. This table shows that this is results of the survey done by Japanese, one of the major bank. And this table shows that ranking of Japanese companies most promising business destination by country. In the year 2021, China ranked #1, but 22 China second, and in the year of 23, China dropped third place. On the other hand, say Vietnam is ranked #2 last year, and also Indonesia gradually picking up to 5 ranks last year. Philippines also 8 rank, anyhow, say, among these top 10 countries, those 3 V.I.F is ranked here. So we tend to think that the shift from China to this V.I.F countries in terms of foreign direct investment may continue that drive their economy. Next thing is that the population and also the consumption. As you can see that top right chart, this shows that say population growth, and the 3 countries may continue to grow in quite longer term, and also the composition of the population is quite good for the long-term economic growth. Bottom left chart shows this working age population ratio. This working age is 15 years to 64 years old. And as you can see on this chart, up to year 2040, those working age population ratio more than 65%. That means more than 2/3 of the population is of working age. The working age population is not only workers, but also quite active consumers. This segment will expand consumer spending and support the economic growth quite longer term. This is a consumption thing. And the other driver is infrastructure spending. As shown on the right bottom, this is the rural and urban population, the spirit of the population in area. Now, year 2020, this spirit, urban and rural, is more or less 50-50. Now is population is expected to increase in urban area, as shown on this chart. This means this create the demand for the infrastructure, as the roads, railways, and electricity, and also the housing demand, also the growing. Those sort of say infrastructure spending may support this regional economy, but long term. Let me touch upon the quite unique characteristics of each V.I.F countries. Firstly, Vietnam. Vietnam actually started Doi Moi renovation policy in 1986 and achieved quite rapid economic development by adapting market economy mechanism and promoting open door policy. Upper chart shows this Vietnam trade and FTA agreement, free trade agreement. So Vietnam government has quite strong intention to set up those free trade agreement to grow the trade and also the investment. That will lead to strong growth. And as shown on this bottom chart, because of this FTA arrangement, will create the investment demand into Vietnam, continue to rise of this trend. Now, recent year is about $23 billion. That is more than 5% of GDP. Next is Indonesia. Indonesia is, of course, has the largest population, 275 million people there. So that means, again, younger population there, so consumption spending will grow quite long term. In addition to that, Indonesia is also quite resource rich country. This table shows one example, nickel reserves and the production. In terms of reserves, they have 21 million tons and a world share 21%. And in terms of production, they produce 1.6 ton, and world share is about half, 48% in the year 2022. And unique aspect for Indonesia is that they have a strategy for value addition to those resources. Actually, say in the year 2020, the current president Joko banned exports of unprocessed nickel ore. So they try to value add on those resources and create more strong, say, manufacturing base. Because of this, lot of, say, like I say, Chinese electric vehicle manufacturers now started to invest in Indonesia because of they have, say, nickel resources. So that sort of, say, thing may continue to, say, improve their, say, manufacturing base in Indonesia. Finally, Philippines. As you know that Philippines official language is English. So take advantage of this English good speakers. They have two, I would say, large, I would say, industry. One is overseas remittances, and also the other thing is BPO, business process outsourcing. If you look at, say, bottom left chart, blue line shows that overseas Filipinos remittances, and orange line bar shows the BPO industry revenues. Now, year 2023, now both actually more or less $35 billion US. So each of, say, 8% of GDP created by those things. And other interesting thing is that this remittances actually never decrease over the last 20 years. Even in Lehman crisis, this remittances continue to grow, even such a crisis period. This probably indicate that, say, this remittances is quite essential for the life of living in Philippines, so that, say, overseas workers tend to, say, maintain those remittances even in quite difficult economic condition. So that is quite, say, quite stable source for the, say, consumption for the, say, Philippine economy. And the other thing is that bottom right chart shows that infrastructure spending. This is again now current President Marcos paint a picture for this infrastructure spending up to year 2028. More than, say, 5 to, say, 6% infrastructure spending is planned here. Philippines, as you may know, that every 6 years they have a, say, presidential election. But actually, say, they have a more longer term economic plan, year 2040. That is actually, say, developed by, say, President Aquino presidency. So even, say, next new president is coming, this basic infrastructure spending, so forth, should be maintained. That is another quite unique aspect for the Philippine economy. So those three countries may continue to grow. On the other hand, there's economic stability also we have already seen here. If you look at, say, top right chart, this shows the consumer price, the inflation. They have good, say, how do I say, the knowledge or expertise how to manage the macro demand. So there was picking up inflation in Vietnam in the year 2011, but after that, the inflation is quite, say, under control, I think, because of their macro management policy. And also the bottom left show that external debt to GDP, this is well below 50%, so quite good managed. And because of those fundamental things, their currencies are relatively stable. Bottom right chart shows that year 22 to 23 Asian currency against dollar situation. And these 2 years, as you know, that US turned to tighten their monetary policy, rising interest rate. So quite strong pressure on those Asian currencies. Particularly, say, bottom line shows that the Japanese yen quite under pressure and 10% per annum depreciation. So compared to this situation, actually, say, in case of Vietnam, 3%, and Indonesian rupiah and Philippine peso around 4% per annum depreciation. So that this relative strengths also show that there are good, say, fundamentals. This chart shows that, say, recent things. Top left chart, the green line shows the US federal fund rate, and next, say, gray line shows that 10-year US government bond yield. Now, they are entering into the rate cut cycle. So 10-year US bond yield seems to have peaked out. Then red, yellow, blue line show the this V.I.F currency against the US now bottomed out. So because of this rate cut environment, that's ease the pressure on those V.I.F currencies. So that means that these central bankers, V.I.F central bankers, now more easy to ease the interest rate, monetary policy things. So that may support for the growth and also the good for the equity market. And bottom right, top right chart shows that Vietnam's index and the PE. Orange line shows the Vietnam index, recently quite firm trend. And also the bottom right shows that the Philippines things, again, orange line shows that the Philippine Stock Exchange Index, recently you have seen a pickup. And also the bottom left, Indonesia also, we have seen rises in the stock market. Turning to this, say, valuation, PE ratio, although we have seen the rising stock market, the valuation-wise is the market is still quite cheap. Particularly, if you look at, say, bottom right, Philippines thing. Now, a blue line shows the PE ratio, and currently, end September, 12.4 times, compared to the historical 10-year average is 17.5 times. So compared to their history, almost 30% cheaper than its historical average. In case of Vietnam, 13% cheaper, and also in case of Indonesia, 17% cheaper. So now stock market start to move upwards, but the valuation seems to be remain quite attractive. My final slide is that samples and VI, a sample company in V.I.F. And left one is Vietnamese IT company, FPT. This company is engaged in system software development and communication services and education. I feel that they engage in education is quite unique characteristics. The company now operates FPT University to develop IT engineers. So they try to develop those engineers to support this Vietnamese this IT related industry. That's quite unique, I guess. And middle one is Indonesia, Bank Central Asia. This is Indonesia's largest private bank. In general, the demand for funds is very strong in emerging market. So Indonesia is also this is the case, and the banking industry is considered growth industry. And particularly in case of net interest margin of this Bank Central Asia is around 6% because of their lower funding cost. And finally, that right one is the Philippines SM investment. This is a conglomerate engaged in real estate and banking and retail industry. So this is a sort of kind of case to buy the Philippine economy. So I tend to believe that strong growth may continue. So this is my presentation. Yeah, thank you so much for listening.
Okay. Thank you very much, Capital Asset Management team. We will be very brief from our side. Let me share just in a moment. Okay, so let me explain you a bit the process and how we're going to manage this fund in GVC Gaesco. Basically, this fund will have two phases. The first phase managed by me, and the second phase managed by Nacho with Capital Asset Management team as advisors. This is a fund, as the majority of our funds in GVC Gaesco, thought to invest actively in the equities in these three countries that we've talked, Vietnam, Indonesia, and the Philippines. But in order to invest there, first we have to get the approval of the opening of the securities accounts to invest there, and that's the process that we are doing now. So we expect our expectations are that we will get the approval in Indonesia and Philippines in the next 2 to 3 months, and Vietnam to take a bit longer, up to 6 months. Currently, all the documentation from our side has been sent, and now we're waiting for the feedback of the market authorities there and also custodian in order to start investing. This would be the final phase and the phase 2 phase and the second phase, sorry. But in the meantime, and in order to not be out of the market and potentially miss the opportunity that Jaume and Capital Asset Management team has explained you, we've decided to create this phase 1 where we basically invest in in funds, in other funds, or in ETF in those 3 countries, or also in the region, in ASEAN zone, to not be out of the market. So here you can see the asset allocation and the structure of this phase 1 fund. Here, for instance, well, you can see all the weights for each region and the different funds and ETFs that we are investing. Once we get the approval for any of these 3 countries to open the securities account and to start to invest there, what we're going to do is to sell all these ETFs and other funds, and then start investing directly into equities, and Nacho start the phase 2 with Nacho's portfolio manager, as he will explain you. So basically, it will be a gradual transition. First, this fund with the phase 1 investing into funds and ETF, and once we get the approval, start investing actively into equities, as Nacho will explain to you now.
Morning. Thank you for your time. I will be very brief because almost everything is explained. Thanks, CAM team, for the extraordinary presentation you did today. Regarding focus the phase 2 of the V.I.F fund, comment this phase will begin when the securities accounts are open in each country. When these accounts are opening, a relevant fact will be published in the CNMV, so the Spanish regulator, and then we start to invest in equity with the CAM advisory support. As you have already explained, you have a huge experience in this area, and you visit company and your managing is very similar to ours. So I will be very clear to every paper. So the CAM advisory and the us. CAM is the advisory of the fund, so they're going to support, to help in the investment of the fund. So we process all the information in-house with our variables and rationals to decide the final investments and the portfolio construction. So that is very clear, and that's all in my side. And now we are ready for any questions, for any Q&A. Thanks.
Okay. So, well, thank you everyone for attending it. And of course, any questions that you might address to any of the panelists here, we will be more than happy to answer it to you. So is there any question on the board? Well, I mean, I don't see any question for the moment. So I just would say that then it would mean that the presentation is clear enough. Sorry, I see that now there is some questions. Is there? Yeah. For instance, that should be probably a question for you, Okasan. Okay. They are asking how exposed is the region to exports and to the China recovery.
Oh, I see. Yeah, China is one of the major market. I would say that say 20% of this V.I.F exports to China. So of course that China recovery would benefit those 3 countries. But at the same time, as I mentioned, that now China plus 1, say major manufacturers shift their production base from China to V.I.F countries. That increase the export capabilities of those V.I.F countries. So even say China not really remain a bit how can I say, the weak kind of things, that the shift of production may support more strongly of those V.I.F exports.
Yeah, no, that's clear enough. Another question should be about the bottom-up process. So all the advices of the securities that capital asset management is going to provide. I mean, all this advice, of course, there are companies with much more higher fundamental discount than other companies. So in this advice, how is this bottom-up approach going to work, please?
Yeah. Our approach is basically bottom-up. Of course, we also pay attention to, say, macro, sort of say top-down thing, but our main focus is bottom-up. So we have, say, the Hanoi office, and of course they meet the companies and to do research on the Vietnamese companies, and also they also have a coverage on, say, Indonesia and the Philippines, and myself also we go actually say make a company visit on those 3 countries to update kind of things, and that sort of things come up with our, say, advice to you. Yeah.
Okay, thank you. Another question is about how often do you visit companies on the ground, you know, in these countries?
I basically say twice a year make visit on those three countries. Yeah.
Thank you. Now there is another question, which and I read it literally. Okay, we have spoken lots about the investment thesis and case for these jurisdictions. What are the potential threats to growth in these regions, and why do you think that they will be mitigated by the investment case? So is it clear enough, the question, Okasan?
Sorry, can you say it?
Yes. The thing is that which are the potential threats to the growth in these regions, and why, if any of these threats happens, why the investment case could mitigate these threats, you know?
Yeah.
Okay.
Yeah. Next. One thing is that those geographical risk, of course, and those 3 V.I.F countries still import the crude oil from, say, Middle East, and that is one thing. But even though that dependency of the oil imports, actually say Vietnam and Indonesia, actually they also produce the crude oil. So 50% of the, say, oil consumption actually say done by say domestic oil production. So the damage not really hard kind of thing.
Yes, and also as you know, the U.S. election comes soon, and maybe Donald Trump, if he re-elected, he will impose the tariff on China and so many Asia country, also Europe country. So, but I think this year the Vietnam export outlook about to the US is expected to remain strong because the geopolitical reality and the share trade policy similarity between the US Democracy and Republican party. Regardless which party win or who will become the president of US, I think the impact on the V.I.F economy will likely be minimal. So this because the trade policy of a Democratic and Republican party are more similar than different. And And also, as you presented before, you said the US dollar will high, and also Donald Trump, if he re-elected, he will impose a tariff on China, and that will let the US dollar increase. So that's the problem, and the Trump administration will have to between impose tariff or implementing measures to lower the value of dollar. So in my opinion, I expect the US to focus on lowering the value of US dollar rather than the significantly increasing tariff, even though he has repeatedly pledged to do the opposite. So if the weaker US dollar scenario will boost the goods export to the country outside the US, and if the US impose 60% tariff on China scenario, Vietnam and another country like Philippines and Indonesia will be the biggest beneficiary in the term of export. Right.
And one thing, another say geopolitical thing is that China's Xi Jinping, he would say that I'll make China much stronger. So there is a lot of the issues, particularly South Sea China, and potential say issues between China, Philippines, China, Vietnam. That sort of things may impact on say investors' sentiment. Yeah, that's another issue.
Okay, thank you very much for the answers. Well, I see that there are no more questions, so I just would say, well, first of all, thank you to all the participants in this meeting. Thank you very much for wanted to listen to all this V.I.F. investment strategy. Of course, I very much appreciate. Thank you so much to Yamazaki-san, Oka-san, all the CAM team, which we appreciate a lot. Okay. And of course, from our side, from GVC Gaesco side, just thanking you for this. And we remain open for any questions you might have in the future. Both of us, all the presence here, will be more than happy to ask any particular questions that you are involved. So thank you very much for coming, and see you all of you later. Thank you.